Good afternoon, everyone. Welcome to this DWP KnowNow webinar, Make It Rain. It's already the 10th edition of our DWP KnowNow. I can see that participants are coming in. We will start in a few seconds. Thank you. Okay, let us start. My name is Katharina Schilling. I'm the head of Secretariat of IWD, the International Association of Water Service Companies in the Danube region catchment area. I will just say a few words related to housekeeping, and then I will hand over. So just that you know, this session will be recorded and made available on demand. And following this webinar, the recording, the presentation slides, and also the session summary will be published on our website, The Voice of the Danube. Please be aware that you can use the chat box on the one hand for general requests and also interactions with other participants. So, for example, to introduce yourself. And please note that you can use the Q&A box to send questions to our panelists. Please use that Q&A only for questions and not the chat box. And please note you are muted, so all attendees are muted, so we cannot respond to any raised hands. Thank you. Our host and moderator today is Patricia Lopez, a dear former colleague of mine within the Danube Water Program. She's with the World Bank, based in the US in Washington, DC right now. And Patricia, with that, over to you. Thank you.
Thank you, Kati, and good afternoon, everyone, to all those connected. It is my pleasure to be here with all of you today, and thank you very much to the Danube Water Program team for inviting me to moderate this session. So before I go on to present the World Bank's approach to utility financing and in general to water sector financing, I'd like to introduce the other panelists for today and also other World Bank colleagues from IFC and MIGA that are joining this webinar today. So our panelists this morning, as you saw in the program, Ms. Vesna Mushlik, she's the president for Aquasan Network in Bosnia and Herzegovina. Most unfortunately, she had today a family emergency, so she won't be able to join us. Instead, Kati Schilling will say a few words about the capacity building efforts from the Danube program around utility financing, and we send our best wishes to Vesna. We also have Mr. Lyubomir Filipov from Sofia Water, Bulgaria. Lyubomir is the Director of Strategic Partnerships and Regulation within Sofia Water. And welcome, Lyubomir, good to see you. And also we have Mr. Ladislav Tolmaci from Erste Bank Group in Austria. He is the Executive Director for Corporate Finance Solutions. Welcome, Ladislav. It's great to have you with us today. And I also would like to introduce my other World Bank colleagues who, in addition to myself, will be connected to the call and able to intervene in the discussion and provide their perspectives on addressing any specific questions on IFC and MIGA products. We have Ms. Larimpali Silo. She is a strategy officer for IFC Global Municipal and Infrastructure team within the IFC, and Mr. Wenhee Sang, he's senior underwriter for MIGA. And I will explain a little bit during my presentation today what the roles of IFC and MIGA within the overall World Bank approach are. So welcome to our panelists again, and I'm going to start with an overview of the World Bank's approach as requested by Cathy and Raymond on our new strategy for scaling up financing for the water sector. So just, okay, I hope you can see my screen. It's not yet coming in full screen. Yes, here it is. So we do have this new strategic framework, which is called Scaling Up Finance for Water within the World Bank. And this is really an effort stemming from a realization of the large investment needs in the water sector across the globe to meet the sustainable development goals in water and climate. The estimates are throwing a dazzling number of 6.7 trillion by 2030, which is basically multiplying by 3 the current levels at the global level from both the public and the private sector spending in water. So we set out to prepare a strategic framework for the bank, IFC and MIGA, to work together on this agenda, very much focused on optimizing and mobilizing additional public allocations to the water sector, but also to mobilize more private financing, including both debt from commercial banks and other financial institutions and equity. So very much commercial lending, capital market operations and PPPs, whilst not forgetting the concessional funding and the grant funding available for climate financing and other philanthropic within a spirit of really mobilizing all the finance available for the sector, including concessional financing and private sources. So this is just a little bit of introduction that, as many as you know, the World Bank and the International Development Association provide concessional financing to both central and municipal governments, utilities as well, with sovereign guarantee, while the IFC can provide investment capital, both debt and equity, to private sector borrowers and subnationals, and MIGA can provide political risk insurance and credit enhancement. So we came up to this exercise with a joint approach as a World Bank group to be able to mobilize this mix of both public and private financing for the sector, considering that the water sector has historically, traditionally, always been funded through public and concessional funding. This is around the globe in developing countries, and that traditionally the water sector has lagged behind other sectors like energy or transport with regards to mobilizing private investment. So there are some lessons learned which we departed from with regards to why water has not managed the water sector to really provide for service providers to access commercial financing, but also why there is fewer smaller private investments in water than in other sectors. You can see in the screen a few of those lessons learned, and I would like to highlight today the lack of financially viable service providers as being one of the key bottlenecks and one of the key barriers from preventing utilities from accessing a more diverse suite of financing options. Then we set 3 strategic directions based on these lessons learned. So first, in the governments and ministries, regulators, so at the institutional level, there needs to be a setting of the enabling conditions for utilities to improve on financial sustainability and creditworthiness, and therefore their access to financing. A second strategic direction that private sector expertise can really be mobilized to improve operational efficiency and address climate impacts through initiatives like non-revenue water reduction or energy efficiency, using contractual modalities like performance-based contracts and other types of outsourcing. And a third strategic direction to really focus on diversifying and expanding the spectrum of finance solutions beyond what has been historically done of providing public funding or accessing concessional funds from IFIs and multilateral development banks. And then because of the importance of climate change in the entire, for the planet and for the development agenda, to really make the investments focusing on advancing the climate outcomes and possibly benefiting also from climate financing opportunities. With this, we set out what we call a World Bank Group roadmap to work on mobilizing additional financing for the water sector, focusing on these areas that you can see in the screen and that I will cover in a little bit more detail in the next slide. So this is like a roadmap of the key areas to focus on. And this is what we call the World Bank Group 10-step roadmap for water sector financing. The very first step would be to build capacities to support the foundations of creditworthiness. That's really at the foundation of being able to eventually access loans and financing from commercial institutions. Focusing on analytics and diagnostics, covering different various steps at the macro and country level. I want to focus on steps 5 and 6 and 7, which is really geared towards utilities, integrated financial sustainability analysis when they come to do their sector planning and their investment programs, really focusing on the turning around of the technical efficiency and the operational and financial performance, which eventually improves the access to financing, and in developing a pipeline of bankable projects. What we call bankable is that really other commercial investors and lenders can come in and really bank the investment. And then steps 8 and 9 are really to look at what are additional options, including local currency financing from domestic markets. And we really do see that for the water sector, there is an under optimization of the capacity of domestic banks to lend at the municipal and utility level. And then there are also innovative financing instruments like issuing bonds or accessing capital markets that some municipalities and some utilities can do. A 10th step, which is on a continuum basis, is to really work on stakeholder engagement to develop a coordinated approach with stakeholders, but also with sector financiers. Oftentimes we see that utilities are spread out talking to a multiplicity of potential financiers. Also at the national level, this happens, and the coordination of stakeholders around a common investment plan is really a way to optimize the efforts around mobilizing finance, but also to really focus on the impact for the governments. As part of the strategy development, the main principle is to really work on leveraging the concessional resources that may be available through donors, multilateral development banks, and IFIs, and blend these concessional resources with other sources of capital for water and climate smart projects. So the blended finance, the mixing of sources of capital is the key principle here. And looking at 3 types of solutions mostly. One is private sector mobilization and PPPs. And this is really to take stock not only of the capital, but also of the great expertise, know-how, and technology that is out there within the private sector, which can serve really transformational investment needs. And I will talk a little bit more about specific type of PPPs for wastewater treatment that we think have a good possibility of helping countries reach the goals around wastewater treatment. A second type of solutions really focusing on state-owned enterprises or basically municipally owned as well utilities through corporate or structure finance, and really tapping into new financing sources like environmental, social, and corporate investors to help out a free fiscal space, which is limited for other priorities for targeting the poor, etc. And then a third type of solutions looking into individual projects that may be smaller and therefore require some level of aggregation through platform type of investment vehicles that can mitigate risks through risk sharing facilities through financial intermediaries at the country level. I just want to mention around the importance of the multi-stakeholder engagement. We've seen countries that have used these platforms being relatively more successful than others because there's a better understanding of the financing needs at the country level. There's common efforts, there's aligned efforts towards common objectives. There is valuable exchanges, knowledge on scalable solutions. There is buy-in from different stakeholders on required upstream reforms and enabling conditions, for example, tariff reform or other institutional reforms that may be needed to strengthen the whole financing framework at a country level or even a utility level. So it really has worked well to match the demand and supply with the expected outcomes of the investment projects and to identify concrete programs and projects that can be supported through the involvement of private sector partners. I just want to mention very quickly how this strategy is building now into the World Bank approach for water. Water has been prioritized at the highest level within the World Bank by President's program, a President-led program, which is the Global Challenge programs. There is 8 sectors or 8 priorities at the global level that have been identified to really represent a challenge for the world and that really need to fast-track action to get the development where it needs to be. So water, again, has been prioritized. This is the fast-track water security and climate adaptation global challenge of the World Bank. Some of you that will stay tuned will hear a lot about this in the future. It has 3 pillars. The first covering access, universal access to safe drinking and water and sanitation. The second one focusing on climate resilient irrigation to increase food production and improve water productivity. We won't focus on that today. And the pillar 3, which is really focused around reducing the impacts of floods and droughts and to increase sustainably managed water resources. So these are the 3 pillars within the water sector that the Global Challenge covers. And again, the whole approach is really to focus on mobilizing additional private sector support and commercial financing for the water sector, given the large investment needs. I just want to mention a very particular type of solution that we're working on, which is the Scaling Rewater program. And this is coming out as a priority in the context of climate change and the need to really advance in water sector towards mitigation and adaptation goals. As we all know, the negative impacts of climate change are primarily perceived through changes in the water cycle, and this is disproportionately affecting the poor, that are the focus of the World Bank Group mission. And the investments in wastewater treatment infrastructure, we all know also that yield significant mitigation benefits through the reduction of methane emissions. So wastewater reuse is a great adaptation mechanism and is instrumental for some countries to achieve water security outcomes. So we're putting a lot of emphasis into the reuse and also desalination agenda for some countries, but I think this is less relevant for the Danube region for the Danube region in general. But the wastewater reuse for industrial use, I think, really presents a nice opportunity. Again, this model is using the best of public sector with the best of private sector, identifying specific roles for each of them, with the public sector focusing on improving the sector governance, efficiency, the creditworthiness part, and the private sector using the water resources services efficiently, promoting stewardship, and also providing additional debt and equity financing through the various means, and coming together under public-private partnerships, specifically to develop wastewater treatment and reuse projects in a way which may be beneficial for utilities that may be lacking the capacity or the financing to put these projects into operation, to construct and operate and maintain these projects, that may also opt because of their mitigation and adaptation outcomes, opt for climate financing opportunities because they are either Paris aligned or because they opt climate finance opportunities from Green Climate Fund and other sources of financing that are available. And keeping in mind that the tariffs, we are all very aware that must be kept affordable, and really accessing additional grant financing through this blended concept can help governments and utilities keep the tariff lower for consumers. Likewise, the hybrid public-private financing model, which basically blends funds in different ways, can help maintain and keep the tariffs affordable for the public or for those groups that need it the most. I am not going to go into details on this slide, but you can see here two different models that are being thought of for these private-public partnerships. One where the public sector comes in to provide viability gap funding, so to be able to keep the tariffs within reasonable levels. There is a public allocation of funding to make the public-private partnership, let's say, bankable. And a second model where the public government does step in as well, but to directly construct a part of the project. So rather than mixing the funding at the level of the PPP project company, there is a part of the project that is done through public procurement. This could apply, for example, to the construction of sewerage networks, while the plant is constructed with private financing. So these are two models that we're looking at. We have the Scale and Rewater program includes, a whole package of standardized bidding documents and approaches to help our clients do this. And I will not go into the detail, but basically the idea is to gain time and efficiency through the process by using standardized documents. Also make it more transparent and more competitive in terms of the offers that can be expected from private sector partners, and to accompany the whole preparation with capacity building and upstream work to make the PPP successful, and make sure that elements at the policy, regulatory, and institutional level are taken care of. And then my final slide that I want to use to promote this concept of PPPs or design, build, operate contract modalities for wastewater treatment and reuse comes actually from Durban in South Africa, where this is the third largest city in the country that was facing a severe challenge of limited water availability, but also limited wastewater treatment capacity. So they put in place a PPP contract through a build, operate, and finance and transfer model for 20 years that was subsequently extended. And the project is treating and reusing approximately 48 billion cubic meter of municipal wastewater for direct use in industrial processes. So the concessionaire that built the plant has a water purchase agreement with these two industries and buys the water from the municipality, the wastewater from the municipality. So everyone won with this model. Specifically for the city, the improvements were First, to delay capital investments in, well, they were thinking of a marine outfall for discharging the wastewater into the sea after some preliminary treatment. They also delayed the capital investment for future bulk potable water, which was needed for industrial use. There was no capital investment required from the municipality or the utility for the construction of the wastewater treatment and recycling plant. So this came at no cost for the municipality or the utility. And instead, they created a long-term revenue stream for themselves by selling the wastewater to the concessionaire, reducing significantly also the city's operating costs and consequently reducing the cost of water services to all of the urban citizens. I want to say this is a model that is not only being utilized in Durban, but many other cities around the world, and industrial companies are using. And we do see it can be an effective and cost-efficient and a way for utilities to develop wastewater treatment capacities and know-how and expertise at a cost that can be afforded by the public. And this will take some matchmaking between where are the industries that might benefit from, that need water into their productive processes, and that could benefit from these kinds of models in place. So I think this is what I had for today. Fortunately, I am missing my thank you slide here at the back, but I do want to thank you all for listening and paying attention to my presentation. I am mindful of time, so we will have the opportunity to debate and to get some feedback on what I've just laid out. But I would like to now turn it to Lyubomir Filipov from Sofia Water to give us some reactions. And maybe, Lyubomir, you can tell us a little bit about the experience you had in Sofia Water regarding an interesting, well, your entire approach to utility financing, but particularly a refinancing process that your utility went through, which is, I think, very relevant to what we are discussing today. Thank you.
Thank you, Patricia. Hello, everyone. My name is Lyubomir Filipov. I'm representing Sofia Water Company. Actually, Sofia Water Company is the only one public-private partnership in the water sector in Bulgaria, and we are a joint stock company between Sofia Municipality and Veolia. Actually, Veolia, I think, is also involved in that Durban project that you just shared with us for the recycling of industrial water. There are some of our technologies used over there. But going back to the Balkans and to that part of the region, actually, very often we are talking about technical efficiency in the water companies, efficiency related to the water losses, to electricity consumption, and stuff like that. But at the end of the day, all that is related to the financials of the company. And I believe that sometimes we are a bit underestimating the financial part of the things, because when we talk about financial efficiency, actually we are, let's say, we could go in two directions. The first direction is, of course, the cutting of the costs and making more savings. The second direction is getting higher revenues, but the water companies, they are a little bit kept in terms of markets and future clients. And of course, the third direction is optimization of the financial structure of the company and trying to get very, let's say, not cheap, but yes, why not cheap financing, and how we do finance ourselves. So I'm going to very, very briefly share a few slides regarding a refinancing project of Sofia Water Company, because we now we are debt free, but back in 2016 and until 2021 we had different debts. So I'm going to say a few words on this on this. Let me just share my presentation. Please let me know whether it's in full screen mode. I think yes or no.
You unshared, Lubomir. You need to
Unshared.
share
Okay,
the-
let me see what's going on. Do you see the slide now or
No.
no? Give me a sec. I'm gonna make another.
Don't
I'll
forget
try.
to
Sorry for this.
press on share. Don't worry. I'm sure. Actually, would you like me to share? I do have your presentation.
Okay, if you have it, let's
Yes,
let me Patricia final attempt. Give me one sec.
Sure.
Do you see it now or
No, there's nothing shared. But if you want, I have them open. I can easily share them right now if you want. Or Patricia. if you
okay,
want to.
please share it because I don't know what's going on, you know. Wait. Okay, we can go on the next slide. Kati, thank you. And the next one. As I said back in 2016, we decided to refinance ourselves just because we had two loans. You can see from that slide. At that point, we had one senior loan from the EBRD and another loan from our called subordinated loan from our mother company, Veolia. And you see the parameters of these two loans. In total, these were 50 million euro. So our exposition towards these two lenders was 50 million euro. At that time, the interest rates were going down, and it was pretty good, let's say, situation on the financial markets in order to refinance our loans. Apart from that, we took some commitments towards the municipality that we are going to reduce the debt of the company, although the debt was not very high compared to the incomes of the company and the equity of the company, but still, we decided to make that exercise. And it's very interesting because we initiated such procedure for refinancing in 2016, and you can see in the bottom of the slide that in April, May 2016, we conducted a market survey with 10 leading banking institutions in Bulgaria. And actually that loan was refused to us since all these banks said that the regulatory situation in the country is not good. Actually, at that moment, the state regulator was transforming itself. There were a new regulation, let's say, guidelines, and we were changing the way of regulation of the water sector. That's why the bank said, for us, it's too risky. So come back to us in a few years when that process is finalized. Can we go on the second slide, on the next slide? At that time, actually in 2017, the regulation situation was better. The new regulatory standards were in place. Also, our business plan for the period 2017-2021 was set up and was given to the state regulator for approval. And at that time, we were also at the end of the renegotiation of our concession contract with the Sofia municipality, because as I said, we are PPP and we work under a concession contract, which expires in 2034. Based on all these things, we decided to make another call to the banks and try in 2017 again to refinance this 50 million euro because we believed that we could reach cheaper cost of capital, cheaper cost of financing. So in the next few slides, I'm gonna very briefly go through this, let's say what happened and how we did that refinancing. Kati, maybe let's go on the second one. Yeah. So how we refinanced? As I said, we started to refinancing again in the middle of 2017. Just because we had an approved business plan from the regulator, and we conducted another, let's say, beauty contest among 16 banks. So we contacted the biggest 16 banks in the country, and we told to them and explained to them that we want to refinance these two loans. 16 banks were invited to submit initial bids. Out of these 16 banks, we received 8 offers. In parallel to that, we decided to make negotiations with our current lender, EBRD. That was one of the our current lenders, EBRD. So in parallel to that, we made some discussions and negotiations with the EBRD. In July 2017, the shortlisted banks did their final due diligence, because during these interactions with the banks, we had a lot of meetings, we made a lot of presentations about how the regulatory model is functioning, what is our technical situation in the company, what's our financial situation, what are the current, let's say, big legal court cases that we have. So these banks, they examined us in all possible directions in order to be sure that we are credit worthy and that there is not a default risk, or the default risk is actually low associated to us. So as I said, in July 2017, the banks did their final due diligence on our activities. Next slide, Kati. So in the end of July 2017, 6 final offers were submitted. You can see that from these 6 offers, the best offers were the following. There was one joint offer between ING and EBRD, where the margin, interest margin, was 3.43%. And that was followed by another joint offer between Express, Société Générale, and KBC banks with an offer of 3.67%, and Citibank with 5.35%. So we decided that these are good offers, but we wanted to a little bit more squeeze the banks and get cheaper financing, because we thought that this is a good moment for that. So at the end, we decided to continue the process with these two, let's say, consortiums. The first consortium was between Société Générale and KBC, and the second one was between EBRD and ING. However, during this final renegotiation on the refinancing, the EBRD decided to drop the beauty contest, and at the end we signed our contract for refinancing this 50 million euro with KBC and Société Générale. Next slide, please. So on this slide, you can see very briefly let's say the summary of the whole loan contract, because that was again very tough situation, and it took us a few months to negotiate that loan contract between all the banks, and to also I mean, it was very interesting because we were negotiating this with the banks and from the same time with the headquarters, because headquarters, they had their own requirements, the banks, they had their own requirements. So it was an interesting situation. Anyway, we signed the contract. Under that contract for financing, there were 2 tranches. You can see tranche 1 for 13 million euro, and the tranche 2 for 36 million euro. So the rate that we managed to reach at the end of the whole exercise was very good rate, because that was the 3-month Euribor and plus 1.35% as a margin, interest margin. So at that time, the Bulgarian commercial banks gave us really good financing in terms of costs. Also, you can see the annual fees were 0. And we had like 3 to 4 years to repay these two tranches. The annual service cover ratio was not less than 1.5, which was pretty much standard for the banks at that time. And also, you can see the ratio between the balance value of the fiscal equity and the balance value of our assets shall be greater than 0.5, which was again a good parameter for such kind of loan. Next slide, please, Kati. So on this slide, you can see the final structure of the lending. Actually, that's what I've just explained. Société Générale and KBC banks, they made a club deal. That means that they provided two tranches with different amounts. Société Générale provided the tranche 1, KBC the tranche 2. Where the maturity were different on the two tranches, but the interest rate was one and the same. As I said, that was the 3 months Euribor plus a interest margin of 1.35%. The key question was what we have achieved at the end of the day. At the end of the day, we achieved a savings of around 6 million Bulgarian levs, which is around 3 million euro. So that refinancing gave us more flexible, let's say, conditions under the loan contracts, less bureaucracy, better cost of financing in terms of interest rates and fees and so on and so on. And at the end, we get 3 million euro more in our accounts. Of course, because we are providing public services, we said, okay, this 3 million euro on top, we are not gonna just put in our pockets and distribute as dividends, but no, we are gonna invest this money on top of our investment commitments, which were already incorporated in our business plan in our let's say concession contract. So at the end of the day, we had a cheaper financing, and the achieved saving were used for the benefit of the citizens of Sofia. Maybe we can go on the last slide. Yes, this is the last slide. The whole exercise actually was very complex one, because you were at the same time negotiating with the banks, with the Sofia municipality, and with the state regulator. Because banks, they wanted to see that our tariffs are very clear for the next 5 years, and they are approved by the regulator. The regulator wanted to see that our contract with the concession contract with the Sofia municipality is renegotiated, because at that time we were renegotiating that contract. And at the same time, the municipality wanted to see that the banks are going to give money to us to refinance our current obligations. So it was very, very complex transaction. But at the end of the day, everyone down the road were happy, because each of these, let's say, stakeholders, they achieved their aims. We managed to repay in advance that loan, and in 2021 we repaid tranche 2 of the loan, and at the moment we are debt-free company. That's very briefly from my side. Thank you for your attention, and I hope we have a good discussions on the refinancing and financing topics. Thank you.
Thank you very much, Lyubomir. This is definitely a very interesting example, and I can see you covered several, if not all of the steps around utility financing that I was mentioning earlier. Very rich experience. So I want to turn it now to Ladislav from Erste Group. Ladislav, would you have also turned down Sofia Water proposal in 2016?
Well, it is really a pleasure to continue after Lubomir, because he touched base on so many aspects that are important for a commercial bank. So definitely you would be getting a very good offer from us, Lubomir. Unfortunately, we don't operate for project financing in Bulgaria. But the rest of the Central and European markets are covered by the team in Vienna that I am coming from. So that's the Corporate Finance Solutions team. And we are discussing in many cases with water utilities their ambitious plans for investments in infrastructure. And you're absolutely right, Patricia, what you said, and I marked it with bold, that water sector lagged behind energy and transport. If you compare to what we are discussing across the region in terms of new investments, it's really drops in the, compared to what is happening now on the other side. And there is definitely as much need to invest as in the other sectors. So with that said, it is a very complex industry, water utilities, and the financing solutions are quite bespoke. So Lubomir touched base on what they were exploring, and that's really, the thing. There are so many ways to do it. So, and it depends also on the community, on the investment needs of the particular utility. So it becomes quite complex for a commercial bank then eventually to structure a financing. And there are maybe, okay, let's go back to the basics, how a bank would approach financing of a water utility. So there would be a project finance that could cover it. We could use corporate financing or municipal financing. And many times it's a blend of all these different products. And also what distinguishes it a lot is the size of the transactions, because smaller transactions would many times or would end up with our local subsidiaries and local project finance teams. The bigger transactions would be covered, for example, by us in Vienna or in the holding units of the regional banks, if there is a cooperation set up that way. But if a project finance tool is being used, then we are talking large-scale investments. We focus on cash flows, rather than the balance sheet. That's very clear. If we use like corporate financing, that would be usually those smaller loans, because that's more suited probably for that, and for other products like guarantees or working capital. That's what the banks could offer then on the corporate side. And now, if we turn to really to what the bank would be looking at if we were to provide a financing for a water utility, I guess, and again, repeating after Lubomir, it's a strong role of regulatory environment. So water is highly regulated industry. We need to understand it. There needs to be stability. We need to see the regulatory periods will define whether it's cost plus, WACC method, or whatever method of regulation. The banks need to understand it. So many times we request, for example, regulatory due diligence even to be provided. And the regulation then reflects itself in the financial model and projections. That's the second key factor that I wanted to mention that we need to see. And we are very happy to build it together with the utilities then, if they have a solid business plan or a solid idea what they want to do. With that in mind, another thing, what we would like to reiterate is it's not only about the future financials. The utility itself also has to have financial standing that is acceptable. They need to have equity for the investments. So we would also review their current balance sheet position. I'm sure the banks did that also for in Sofia when they were looking into financing Lubomir. So that's also what needs to be done. And then with all these factors considered, we are in the transaction. We are structuring it. We need to run the due diligence, to understand the technical and environmental aspects. What is a contemporary practice? I guess every investment would go along these lines. So, and with all these four key factors somehow combined, we can land as commercial banks on very competitive terms. We are quite lean in our operations, so we are, we cooperate deeply also with the IFIs. But in many cases, the advantage of working with the commercial banks is that we are a bit quicker in executing transactions, and we can lend long term and in many cases on non-recourse basis. So that would be the upside, the things that the commercial banks in financing of water utilities can bring. What I still wanted to mention towards the end of my intro was that there are maybe two challenges that we have seen facing the infra financing environment recently, and that is the higher interest rate environment we are currently in. So the base rates have become dearer. Also, our funding costs have increased. So I'm not sure if the margins that were shown, that were achieved in Sofia would be achievable nowadays. And also the investments are have been made more costly by the inflationary pressures we have seen over the past years. So that creates a bit of headwinds. Still, the tailwinds for new investments come from energy savings, for example, that can be achieved, that brings great possibilities now with the high energy prices and so on and so forth. So, anyway, these are the current factors influencing maybe the pipeline. But when we are talking about these four key factors, I guess all the lenders would be looking at really regulatory environment and business plan, financial standing, and then structuring and due diligence of the transaction. So happy to continue in the discussion then, if anybody has special questions.
Thank you. Thank you very much, Ladislav, for this very clear, to the point intervention. I'm sure that we are going to follow up on some of the things you said. Specifically, there is actually a question in the chat for you that you may want to just address before we turn it to others. It's about your geographic scope coverage. The question is, could Erste Bank Group actually consider financing utilities that are outside of the EU Danube water region? And this, I'm interested in your response, and after you, I'm going to turn it over to my colleagues at the IFC Amiga to comment a little bit on how they can help also outside of the EU region as well. But you first, Ladislav, please.
Okay, and thanks for the question. We would be very happy to deploy our know-how a bit outside of areas where our core region is defined. That's where we have banks on the ground. But our project financing mandate allows us to operate only where we have local subsidiaries, and that's the Danube water region. So with that, probably we wouldn't be able to assist here.
Thank you, Ladislav. And is that because the project finance operations require perhaps a more intense level of due diligence, whereby the existence of a subsidiary would be helpful to really assess the bankability, etc.?
Exactly. We would need to have people on the ground that helps us a lot to understand the regulatory environment and who are the stakeholders. And that's why we decided, and our senior management decided, if we are to deploy project finance, let's do it there where we have our local banks on the ground and understand the operations much better. So unless we have this, I can name concretely the countries where we are, but it's basically the Danube Basin catchment area where we are operating, and that's where we can provide transactions.
Yeah, thank you very much, Ladislav. And, for the benefit of those connected, I do want to just quickly mention, on the difference between project finance and corporate finance. Maybe others can come in on that point as well, but just I appreciate that maybe not everyone is familiar with these terms. The corporate finance would be when the debt is put in the balance sheet of the entity, of the utility that is accessing the debt source, whereas the project finance, the debt repays itself from the revenues that are expected to be generated from that specific project. So, for example, a wastewater treatment plant, there would be a specific project vehicle set up to construct and operate the project, and then the revenues to repay the debt would come from that specific project rather than the company as a whole. It's basic, but sometimes it does help out. I want to turn it just briefly to Larin and Wenhee from IFC and MIGA to comment a little bit on what's been said and how the various IFC MIGA products can help. Please, let's keep it brief because we have around 18 minutes left in the webinar, and I want to make sure that we have time for a second and even third round from all of us. Larin, over to you.
Sure. Thanks so much, Patricia, and thank you everyone for this opportunity to join this webinar. I won't take too much time, but from the International Finance Corporation, IFC, which is the private sector arm of the World Bank Group, we do work globally. We are able to invest in water utilities and even with private companies in the water sector in all of the emerging markets, I would say. So just to answer the question earlier, so institutions like the World Bank, IFC, MIGA can certainly increase our investments in the water sector in the emerging markets. I would also add that in addition to the financing instruments that we offer, IFC and also the World Bank provides technical assistance in the form of advisory services. So in IFC, for instance, we have this platform called the Utilities for Climate, U4C. So this is a fairly new initiative that IFC has launched, whereby we work with emerging market water utilities by creating a network of them, where we provide IFC's financing, technical assistance, advisory services, but also to create a network of these utilities to enable more knowledge sharing, peer-to-peer knowledge exchanges, and kind of creating this community of climate smart utilities. So I just wanted to also mention a very kind of specific program that the IFC does offer for water utilities in emerging markets. I'm happy to answer any more questions on that if anyone has them.
Thank you so much, Larin, for that. And let's see if there are more questions in the chat. I'll be screening through those. And then over to Wenhee from MIGA to say a few words as well as to how the political risk insurance and other de-risking mechanisms can help access commercial financing in some situations.
Thank you very much, Patricia. Thank you for your great presentation. Yeah, I think you have covered everything. And for the World Bank Group, financing, scaling up financing for water strategy. I just want to add, a couple of things from MIGA and also the World Bank Group guarantees perspective. First is on MIGA guarantee product and the One World Bank Group approach. MIGA, we are working together with World Bank and IFC to jointly support the water sector project by providing political risk insurance or PRI and credit enhancement product to investors and lenders. And the political risk insurance product, we cover the 4 types of political risk of currency inconvertibility and transfer restriction, expropriation, breach of contract, and war and severe disturbance. And credit enhancement product, we cover non-owning of financial obligations risk at 3 different levels of sovereign, sub-sovereign, and SOE levels. In addition, MIGA, we also deploy we call the private sector window or MIGA guarantee facility to support the project in high risk and low income countries. Secondly, I want to mention MIGA's unrivaled pre-clean management function. This is one of our key value added we can bring to the project. And so far, we have already supported more than 1,000 projects globally, but we have only paid 11 claims. However, we have successfully resolved more than 155 major investment disputes between foreign investors and host government. And then investors and lenders, they approach MIGA not only for the payment, the insurance, but also for the protection of their project. They know in case their project encounter problems during implementation, MIGA is unable to help them resolve the problem. This is the value added I want to highlight for this one. And thirdly, since 2000, we have supported 21 water and wastewater projects globally, including the very successful blended finance types of project in Jordan, i.e. the summer wastewater treatment in Jordan. As Patricia mentioned multiple times in her presentation, blended finance, approach is really a very good way to achieve the quick win. And from the World Bank, from the World Bank Group, from MIGA's perspective, we would like to work more closer with the World Bank IFC, as well as the other donors to develop more blended finance project. So, and then lastly, but very important on the World Bank Group guarantee reforms. I also want to mention this one. Water sector, similar to other sectors, water sector can also leverage and benefit from the new World Bank Group guarantee platform available July 1st this year, which will move all the guarantee experts from the World Bank Group into one roof at MIGA, and also compile all the World Bank Group guarantees product in a single manual. So this is expected to provide private sector and also our country clients with easy access to guarantee at the one-stop shop. And finally, in terms of the EU region, on MIGA side, we haven't done much in this region, but we look forward to having opportunities to support more projects in the region. Thank you.
Thank you very much, Wenhee. This is very useful and for highlighting some examples as well. Let me turn a question from your intervention to Ladislav, actually, because there's some questions in the chat around other regions and how political risk may affect the likelihood of commercial banks such as Erste Group providing financing. Any reactions, Ladislav, to that in light of what Wenhee also just explained about guarantee products? How do these sound to you with regards to enhancing the creditworthiness of specific borrowers or projects? Is this something that you are also interested in further exploring?
Of course, yes. If we are in an environment where we can't take all the risks or require to share the risks, we would of course look for cooperation with MIGA. We would look for the AB loan umbrella cooperating with the IFI loans, or we would look to the export credit agencies, so that would be the natural mix of tools the commercial bank would then search through cooperation with the partners.
Very
So,
good. Very good. No, this is really good, because this is where the very clear direction where we all need to work, right? If we really are serious about mobilizing more finance for the water sector, we really need to work together. And of course, I'm highlighting the World Bank Group products in this webinar because we are we've been asked to present on the World Bank Group strategy, but indeed there are many other guarantee and financing products available that our utilities connected to they can opt for. So thanks for that, Ladislav, and for that collaborative spirit. We hope we can do more things together in the ECA region. I do also have one question around this collaboration between concessional and commercial financiers and how this can benefit utilities. And this question is for Ljubomir, actually, since you do have very close experience in working with both the multilateral side and you explained how you reconverted or refinanced the loan from EBRD. Where do you see the optimal contribution of the different types of financiers in your experience? And because the time is short, I'm just going to, after your intervention, if Kathy Schilling, you could say a few words about the capacity building programs of the Danube Water Program around utility financing, that I think would close it very nicely as well. Because let's not forget that we are discussing financing solutions that can only happen once the financial standing is already in good enough shape to get there. So over to you, Ljubomir, for some comments on the optimal mix of concessional and commercial, and what are the pros and cons of working with the different types of financiers, and in your experience, and then to you, Kati, for a brief remarks around that.
Thank you for this, Patricia. Actually, this is related to the explanation you gave earlier today about the difference between the project financing and the corporate financing. So when the Sofia Water Company was created, it was created as an SPV, as a special purpose vehicle back in 1999. And at that time, the main shareholders of that company were United Utilities, International Water, and EBRD. So EBRD at that time was like a shareholder in the company in order to be aware of what's going on in the company, how the decisions are taken. And EBRD was the bigger lender of the company. And actually, the initial activities of the company were financed by the EBRD, which is an IFI, International Financial Institution. So from my perspective, the role of the multilateral financing institutions is on the stage when project finance is needed and when, let's say, new businesses are established. For example, like that was the case in Sofia. So at that time, we needed guidance. We needed, somebody to tell about how the things should be done and to be, to in a way babysit us. So I could say that IFIs are more for the babysitting period of the new ventures when we need that project finance to kick off the business. And within the years when we, let's say, matured and when we grew up, then we saw that we are, let's say, strong enough, and we could, go and look for corporate financing based on our balance sheet. And actually, this that refinancing which we did, that was not for a particular project. That was just for financing our investment program, I mean, our CapEx program. So the bank didn't, ask too many questions. For example, what kind and what type of projects we are going to use the money for, and things like that. That was not the case back in 1999 when the EBRD financed, because that time I was not part of the company, but I spoke with colleagues of mine when the process was kind of too bureaucratic, a lot of reports, what we done for what kind of projects the money will be used for, and also they wanted to to control a little bit more the things. But That's logical because that was the beginning of the venture, the beginning of that SPV. So to sum up, for me, the role of the IFIs is when we are still, young, when we are kids. So we need the support of the IFIs when some also kind of education is needed. And afterwards, when we grow up, then we could go on the, let's say, free market and make a beauty contest among the Erste, KBC, Societe Generale, or ING, Citi, and all the commercial financing. And actually, that's how the things happened in Sofia. But for the both in the both cases, you need expertise. You need financial people around you to help you how to structure this. Because okay, we have the technical guys, but at the end of the day, we have to have the financial guys. And in the both transactions, from when the company was set up and here when we have refinanced, yes, we did it internally, but we also use some kind of external advisors, because this is very specific topic, and all the time you need the capacity to understand these deals and to understand the main, let's say, assumptions and logical links behind all these things. Thank you.
Thank you very much, Lubomir. Those are great comments. Kati, would you like to come in?
Absolutely, and I'll try to be brief because we're already coming to the close of the webinar. I would just like to share a few slides that have been prepared by Vesna, who unfortunately could not join us today, as you mentioned, because of a family emergency, on the Access to Financing program, which is one of 8 programs under DWP, the Danube Learning Partnership. Vesna would have been the ideal person to present because she is the president of Akvasan, and Akvasan network in Bosnia and Herzegovina has not only successfully pilot tested the access to financing, but Vesna is also one of the certified trainers for the programs. This training program should help utilities to access financing for projects related to performance improvement, and it has been created with the support of the World Bank again, and also builds on courses developed by the World Bank. So just very briefly, the approach and the methodology. If you would join that training program as a utility, you would participate in 3 workshops because it delivers the standard 3-workshop DLEAP cycle with homework and trainer support in between. We have 2 different target groups. One are the decision makers and one is the upper management, and it's a joint program for utilities and their owners, so the public utilities and their owners, the local government units. So I would say that's the very special part about it. The events, those 3 workshops that you would join, are built as training and peer exchange. The overall objective of the training program is to create an instrument for cooperation with IFIs. So, for example, education of employees, you will receive an action plan, and it also strengthens the collaboration of the local government units and the public utility companies. The training program would contribute to create a reliable partner for IFIs, but also commercial banks. So your utility will be in a better shape to discuss financing with those partners. And you would achieve a better understanding on how to prepare and implement capital infrastructure investments. Very briefly, between those workshops, you would receive homework. The first one is a self-assessment of operational and financial indicators. The second one is the development of an action plan for achieving financial sustainability. And so, in conclusion, the linking the technical and financial performance is a must. It's very beneficial to have a combination of public utility companies and their owners in the course of that training program, and also those 2 different target groups, because it allows for tailor-made approaches responding to the specific needs of each of the groups. In addition, it's recognized that business performance and cost effectiveness analysis needs to be conducted and an action plan developed as a requirement for creating conditions to attract, to absorb, and to make capital investments sustainable. And the program could also be used as a pre-assessment exercise for LGUs and public utility companies that are looking for a loan. And it's applicable for the implementation in other Southeast Europe countries. Having said that, we had a training of trainers for this access to financing program in last October. And now 2 associations in our region, ATCOM in North Macedonia and also Šukalj in Albania, are preparing to roll out the training program in the course of this year in local language. So if you're a utility based in North Macedonia or Albania or Kosovo even, and you're interested to join that program, please get in touch with your utility association to know how the plans are and what the plans are and how you can start participating in that one. We will, of course, also inform you accordingly on our website. And with that, I'm already done, and over to you, Patricia. Thank you.
Thank you so much, Kati, and it's really a pleasure to see this program seeing the light and already being rolled out in all these countries. I think I really have great hopes for some impact there. So, Kati, this time went by so quickly. I didn't even realize this was happening. I would spend a bit more time talking with everyone here. Our panelists were fantastic. Thank you so much, Ladislav, for joining this community. Thank you so much, Ljubomir, for sharing the experiences from Sofia Water. Thank you, Wenhee and Larin, for connecting and sharing the perspectives from IFC and MIGA. Thank you all to all those connected. I saw people were saying hello in the chat, so greetings. And just to say, Kati, that we are available. May seem a bit far away, but we're always very connected with the Danube Water Program community. And of course, available to share resources from the World Bank Group side with any of you that may approach us through Kati, through Raymond, or also directly. So thanks again for inviting us. And Kati, I'm not sure if I should close or it's over for you to close formally. So I should close. Okay, so with that, I'd like to wish you all a really very good day, and let's stay in touch. Thank you.